I apologize with the hand up in the eyes, but I'm having a little problem seeing back there. Okay, I think we're going to begin here. I know some people are starting to come in. I'd like to introduce myself and my lovely panel here as you are now part of the ESG conferences. And first of all, I'd like to say thank you very much again for attending. It's a good afternoon to learn about ESG, and this panel is going to give us some insights. I have very professional people here with a lot of experience, and hopefully they'll be able to educate us, answer some questions. We will open it up for questions and comments, so feel free to raise your hand. We'll get a mic to you. If not, just please raise your hand. Real quickly, I am going to let my panelists here introduce themselves. Let me just start off myself. My name is Gerry Perez. I'm the Chief Executive of Interactive Brokers. We're an international broker-dealer with 2 million customers worldwide, and we do have ESG initiatives. But for now, let me just start over here with Cam. Go right ahead.
Thank you very much. My name is Cam. I'm Head of Product at The Big Exchange, which is an investment platform that rates investment funds before they come on for their positive impact on society and the environment. I'm a product guy, so I'm not a sustainability expert or an ESG expert, but I do come at an angle of how people interact with products, how they're sold, how they're positioned. So I think I can provide a little bit of an interesting take that might be slightly different to some of my panelists here. And thank you for having me.
There you go, Agamemnon.
My name is Agamemnon Otero. I'm the Chief Exec for Energy Garden. Energy Garden is focused on creating community gardens and is funded by solar. So we say from sea to solar to society. And it's London-based, so I can talk about true ESG investing in community-owned renewable energy in London. And I can give that to you straight and facts from here and like within a few 100 meters of gardens that are here. But I will pass over to my fellow.
Hello, my name is Elizabeth Pearson. I am the founder of Simple Successful Stocks. I give people the knowledge, the confidence to start and stay investing in the stock market and take charge of their financial future in a way that's simple, sustainable, and bringing a little bit of sparkle to it all. So I'm a financial educator, and I teach people in talks, in workshops, and one-to-one about how to invest in the stock market.
Great, then thank you for that. So we're going to try to cover different types of topics. We're going to talk about a little bit of information or questions that we received in advance. Effectively, there's a lot of, let's say, misnomers. Sometimes we cross over with terminology of what is actually ESG. What is an ESG investor? So let me pass it over to you to Cam. We get that question a lot. What is an ESG investor?
Yeah, it's an interesting one, and one that in my kind of current role and at the Big Exchange we try to avoid as best as possible, an ESG investor. One, because I don't think it exists. I think it's not something that someone would define themselves as, and as a retail investment platform, our job is to help investors find out what they are, right? Find out whether they come with an investment aim, a sustainability aim, a goal, a value, a belief, some sort of ethical or moral principle, which I don't think ESG really means or covers. It's an industry term that has been brought around because of data, essentially. And as a product guy, I see ESG as data, and it's allowed us to build strategies, it's allowed us to build frameworks, it's allowed us to build a lot of positive things to focus lights on, to focus kind of an investment on something, on a lens. An ESG lens is often used, but I just don't believe that there are that many people out there who could define themselves accurately as an ESG investor. I think it's a bad term.
Let's stay a little bit on that trend. So how can we get more investors to invest in ESG? Agamemnon?
Agamemnon.
Sorry.
It's okay, this is going to be fun. It's small enough room that we can do this. So I disagree.
Yeah.
And I think that before it was stolen by the big bright lights and invest in community. Environmental, social, and governance was truly aspirational, and it's what all of the on-the-ground social movements were trying to deliver. We were trying to deliver a triple bottom line, successful project. And when corporates came in and large institutions came in, they tried to package a really, I love this. I'm gonna get a drink. I feel my throat is parched already because I'm so excited. So it really is one of these things where you end up having a brand name and a useful technique for trying to capture people's money, but actually there are hundreds of millions of people in Europe and all over the rest of the world who are very specifically interested in environmental and social governance. The problem is not that it doesn't exist, it's that it's being used willy-nilly. There are, and I represent to you, I co-founded Community Energy England, Community Energy London, I sat on the Community Energy Contact Group inside the Department of Energy and Climate Change. I'm the EU Consumer Energy Group. I helped set up RESCOOP, the Renewable Energy Cooperatives for Europe. And we have over 5,000 community energy projects across Europe, of which the first co-op on social housing in London was set up in 2011, was the first UK cooperative. And those were considered truly environmental, social governance projects. And they deliver that. They deliver communities coming together. They have schools programs, youth training programs, greening projects, fuel poverty projects, and that's it. And because they're cooperatives, the financial return is based on delivering social environment returns and not financial. Fiduciary responsibility is ruining the world, and it's basically we as a community need to talk about this in this lighthearted but also truthful way. ESG exists. It's been turned on its head. It is environmental, social governance, and very few organizations are doing anything other than taking a little tab of E, which is environment. A little bit of solar panel on their rooftop, a little eco-bling, which is not true. The social and the governance piece is so fundamental, and that's why I am here representing one vote, one shareholding cooperatives and community benefit societies, and am an example and represent that for London, which is open right now. So I disagree, but I also say it's important we talk about these things in this way.
Let's stay in that point. You're working with a lot of communities. Do you find the councils to be very open or very bureaucratic in allowing you to carry out these initiatives, open up these conversations?
As someone who's worked on Quad and SEPT part-tied lease agreements for the first projects on social housing, for the first projects on the national rail infrastructure, I would say that word is, again, being used by large-scale investors saying this is difficult and it takes too much time. But where is the most social value? Where is the most gain? It's in social housing. It's in the fuel-poor areas. It's in the areas, it's in the schools which have the highest amounts of lung problems with asthma and everything, where these schools are right on the main roads. So those are the places that need it most. Okay, it takes longer. Okay, the return might not be 15, 20%, 5x. I love everything. Oh, we're returning 5x. Well, what are you returning in this context? As an ESG investor, you have great opportunities to work with them, and the councils are open. I've worked with 14 local authorities across London and have been made a London leader and can use the top of the, we can have this meeting again for free in the top of the mayor's office because they have said, they love to support community energy. I've helped us found Community Energy England, but also Community Energy London. So they're supportive, the council's supportive. The whole idea is that it just takes time. Any large organization that's trying to work with social elements takes time. So they're helping is what they can do. The DFT, they're helping in what they can do, but to move a directionality from one place to another is very difficult. So I want to say that bureaucracy in this case is a necessary element of working with hundreds of thousands of people on a daily basis, and it does take time, and I have lost hair and sleep over it, but they are working with us, and that is important. The idea that big multinationals and corporations make quick money faster is just not true. Working with a lot of people that way, you can do it, they do want to work with us, and they are working with us to make this happen.
Great, thank you for that. So Elizabeth, you deal with a lot of investors, and we also deal with a lot of investors. When we come across as these investors come to us and say, ESG, there's a lot of benefits, there's a lot of vital importance, but they see it as maybe something else that, maybe you could clarify, is it really fundamental? Should it be additional? Do you see more individuals trying to justify, well, I want to do ESG because, again, it's something that I should add on to my portfolio, or is it something that is really fundamental for the better?
I think it varies. I mean, when I'm teaching people, I always tell them, like, this is an option, and some people are interested, and some people it's just not a concern at all. What I have noticed, though, is that it tends to be women who kind of are more interested in it. So, I don't know, I was talking to someone recently and telling her what I did, and she really wasn't that interested. However, I did mention that I was, it's about sustainable investing, and suddenly she was interested. So I think there is something in that. So, there's obviously a massive shortage of women in the investing world, in the financial world, and if that is a way that we can bring them in, I think that's really important. I think people who are in it or care about it will want to know more. People who are not, they just, it's just sort of profits first. And then maybe, they're taking the angle, well, I don't think they necessarily are. I could make a lot of money and then give that money away. That's another way of approaching it. So.
And some of the most widely misconceptions about ESG investing that you come across?
Well, I mean, I do my best to explain these terms very clearly. I mean, I agree with what both of you are saying. I mean, I think the whole, this whole sector is, I mean, the financial sector is full of jargon, and then when you layer on it all these other things, it's just a nightmare. So I tend to call it sustainable. Is it defensible? Can I uphold it? And is it making a difference in the long term? And actually, all this sort of swilling around and adopting terms, it just makes it even more complicated and opaque. And the financial industry is opaque enough as it is.
Great. And on the professional side, fund managers getting more involved into ESG. How has the ESG initiative impacted fund managers? Kim?
Yeah, well, I was just on Elizabeth's point there around what we've done as an industry, like the financial industry, sustainable finance in general. I was at a meeting last week with, and I'm going to plagiarise here, so I'll have to say his name, CCLA's head of sustainability, Dr. James Cora, and he said that he had been reading to his daughter, Dr. Seuss, and one of the stories is the glunk that got thunk. And it goes about Dr. Seuss's daughter who goes upstairs after dinner and thunks up fuzzy, furry, happy things, right? And she can think up these things, and they happen, and she understands that she can do it, and she can go bigger, and she can go better, and she can make up happier and fuzzier things until she thunks up a glunk. And this glunk is, I think, that is greenish, not cleanish, and has bad breath, right? And I thought that was a fantastic metaphor for what's happened and as you mentioned, Agamemnon, what's happened in sustainable finance. We've taken something which had, good purposes at heart. You'd like to think that there's a purpose behind why we're doing this. There's a purpose to why capital needs to be moved to direction to companies that are doing things well, that are moving capital away from what we'd call harmful industries to good industries, to promoting change, which is a good thing. But I think what's happened is that we've thunk up this glunk that needs to be kind of straightened out. And regulation's helping that. Investors are becoming more aware, is one thing I would say. They're aware of projects like yours, which are creating tangible impact in their local communities, and are thinking, okay, if I am investing with my ISA in funds or with major corporates, how can I get something similar to that? How can I get something like that with scale? And asset managers are now, and there are various good examples of this. We can't tarnish everyone with a bad brush, but it does happen, right? Who are doing great things. And they will now, with regulation, start to be rewarded for doing those things well. And we're on a progressive state at the moment, which is good.
Interesting. How about regulation? You just brought that up.
Yeah.
Do you see regulation being positive right now for ESG, or do you see more barriers coming in to slow down ESG investing?
really think that the word has been used, branded around too much. Some of the really supportive organizations who've seen the work that we've been doing at Energy Garden and have gotten behind us found they were using the word ESG to their investors, and they raised 1, 2, 3, 4 billion to invest into solar, wind, anaerobic digesters, green data centers, okay? But they were promising the moon, right? So it's 5, 6x and sustainable. So what is the sustainable? And I brought that back forward because they can use that word. And we were just, the speaker before us, she left.
Yeah, Julia.
She has. Julie left. So she was talking about what the FCA is going to do. It's almost like the advertising trading standards. They're not going to let you just, oh, well, we're ESG, we can sit in this room, this is fantastic. No, you're not. Get out. And I think that's really what happens. The majority of families that are investing more than, so just to be clear, from the little bit of, I've set up many co-ops across the UK, and the one thing that I've understood in our own personal data is that individuals will invest between 50 and 5,000 pounds. But once you go 5, 10, 15, 20, 100,000 from these, they'll use an advisor. And if it's a family fund, they'll bring in a big fund who even looks over their family fund advisor. And those guys aren't interested in using the projects that you're talking about, like Energy Garden has a 5.5% return. It's across London, it's local, it does schools programs, it does all these things. We make beer, we have all sorts of things, and it goes to the community members, and we have beehives and whatever. It's great, everybody loves it, kumbaya, but it does not get the 100,000 pound family houses, and it doesn't get the 2, 3, 10 million independent or large scale. Rathbones, for instance, they were saying, yes, we definitely would do it. The chief exec said, yes, at 100%. 7 investors who have their family funds in there, yes, we have to do it. And if you're listening, Bryn Jones, head of finance, was like, this is a great project, but I can't see why you're doing this. Are you independently wealthy? And I said, no, it's because I believe in this and I believe in the projects. And Bryn is not alone. This is what happens. We've been supported by Bank of America for many years with grant funding, but when it came down to investing into an actual project, when it came to 5, 10 million in, they know the social outcomes. They've been putting that in their metric. They love it. We have a ESG metric that we've created with Imperial College and Bank of America funding that links the UN Sustainable Development Goals, ESG, national health proxies, UK government proxies on health and well-being, pre and post surveys. All the data is there. It's a beautiful, moving metric for investors, and it doesn't get them to do it. It doesn't get large-scale family houses, advisors, and banks to say, put your money in there, look at all the good it's doing. They take the ESG, and they take a few of the pictures from the large organizations, and they say, this is safer. I mean, it's like glyphosate. You might as well, it's the same story of Monsanto over and over again. It's this idea that we'll take a good story, every year you have crop yields going up, when actually the crop yields never went up. And they've just kept telling farmers you'll have a higher crop yield. The original sustainable models were working. This is the same with communities. We've been doing this on the ground for 20 years in this country. And these are Rochdale cooperatives. And yet, the ESG narrative has been packaged up and taken away and being used on large billboards. And so I think that we do need regulatory frameworks, like Julie is saying. And without that, it's not a level playing field. Because if it was, they'd be out of the game.
Interesting. Elizabeth, again, you face the public a lot with respect to if you had the ability to, let's say, influence the geopolitical or the suppliers, broker-dealers, of how to get more people to invest in ESG, what would be your suggestions?
Oh, wow. So if I could wave my magic wand, I'd wave my magic wand of financial education. I think that's the only way anything is going to change is if we wake up to what's going on, really going on, and we get frightened, terrified, actually, because that fear, I hope, about our children, our children's children, and what they face will motivate, I hope, into people to actually taking action and making whatever changes they feel they can make. It might be changing their bank, it might be taking money out of their bank, looking at their pension. Just it's like having a voice and reaching a critical mass where it cannot be ignored. It only needs to be 3.5% of the population to kind of, to shift things. So I would wave my wand of financial education and, do it like tomorrow because we're running out of time.
Here's one for all three of you. Investing in ESG. Prior to the pandemic, post the pandemic, do you see investments in ESG, the costs for individuals that want to invest lower? Is it going higher? You always hear about, I want to be ESG compliant as an entity. I want to provide you financial products to trade. But do you see the trend that the costs are going, is the cost a barrier to investing? I'll start with you, Cam.
Yeah, can do. So, to recap, we allow individuals in the UK to invest in mutual funds that we rate for their transparency, how they engage, whether they meet their intention is matched by their expectation of the customer, essentially saying, does this fund walk the talk, not just talk the talk, right? When we survey our customers and we ask them, and this is me going back to product geek side, when we ask them kind of like what they like about us, what are the key reasons for them investing, the first things that they invest, the reasons why are more values-based, that I want to make environmental change, I want to make social change. Normally, when you think about investing, it comes then to performance, like how much money am I going to make back, which again is right, so that comes third. Costs comes down about in the sixth category. So for people who are driven by wanting to do something extra with their money, and I think the key word here is they value what these funds are doing, as long as they can prove it. As long as they can prove that the intention of the fund is matched by the expectation and the outcome, then that is a good value for an end investor. I think where that whole pyramid falls down is if proof can't be there, then this high cost has been paid for no proof. And that is where we get into this whole sham of greenwashing, right? Which is actually where someone's ended up paying more for something that they didn't get. So I don't know if that answers your question, but I think...
Yeah. Would you like to?
Yeah, would you say the question again? Because
regarding costs, you hear that entities, fund managers, broker dealers, when they started the ESG phenomenon, started to provide investment products, that the cost was higher. Do you see the trend going down, or do you see the trend going higher?
The cost of what?
So, for example, brokerage fees, fund managers saying, if you want to invest in ESG compliant products, I'm going to charge you more.
Over the last 10 years, as we've tried to build cooperatives bigger with community energy, what we've seen was that 10, 15 years ago, the projects were 50 to 150,000 pounds. So the bank said, we can't do that project because it'll cost us to do due diligence. Just to do the DD on this project will cost that much. So what we've tried to do specifically at Energy Garden is create a very clear, cogent narrative, then get the highest standards mark. So I helped to initiate the process of creating a standards mark for cooperatives, community energy cooperatives, which is now run by the Co-ops UK. So we have the standard mark for that. So there's that, a standards. But then, for instance, like Friends Provident Foundation or Co-op Foundation, they then do due diligence, and then they're willing to share that. So, for instance, anybody know Friends Provident Foundation? They've got like a £30 million endowment, and they're helping projects across the UK happen. And so they've just put £100,000 into one of our projects. But they've said to other organizations like Esme Farabon and Co-op Foundation, said, if you guys want to use that, we'll open source our DD, so you don't have to do the DD again. So in a lot of these funds, when we were saying, the cost is going up, absolutely. I mean, people say, oh, we can put you in a triple A star fund. It'll just cost you 35 grand for us to do the due diligence because we'll put it into a mutualized fund for you. And so now that it's becoming more attractive, yes, it's attracting bigger handling fees, but there are, in the grassroots movements, a way of addressing that, which is that the organizations have standardized the processes through the Financial Conduct Authority. Then through the Co-ops UK, they've looked at all of the cooperatives that are in the UK and said you can then have a standard mark. And then you have organizations like Friends who are standardizing and sharing, open sourcing their due diligence processes on different types of cooperatives, which is reducing the price. But the direct answer to your question, it's going up. Is it going up for everybody? No, because some people who are working together have recognized some of the key fulcrum points and said, if DD is stopping you from investing, here's the solution. And if anybody's interested, Friends Provident has open sourced their due diligence on Energy Garden for our £1 million share offer that's out. 800,000 is raising right now. So that's real, and that's an example that backs up what I'm trying to tell you.
Okay, Elizabeth?
No, I don't think think so, because a bit like Cam was saying, if people have made up their mind that they want to, this is important, they don't mind paying a bit extra, as long, of course, that what they're investing in, and they're using a platform like the big exchange, then they know what they're paying for, and they're just understanding that what they're paying for is somebody's, hopefully, expertise in selecting investments that are in alignment with their values. So I don't see it as a barrier, no.
I'm going to ask the crowd if you have any questions. I don't want to wait just to the end. Any questions? Yes, ma'am.
Yeah?
As you started, what your motivation for the energy garden project? Was that coming from the solar side or from the social community side?
Social.
Garden side?
Yeah, the social community side. I believe that the answer to like life on Earth is regenerative farming and having a connection with people. The most important thing is our connections to one another, but without this sort of biome, it's wasted. In urban areas globally, we're looking at 75% of global population will be living in cities, and if we can come up with a resilient model for city infrastructure where people can collectively come in and crowdsource and almost take over and become caretakers and for the urban environment, then we can make a transformation towards a just and future. So the motivation was very specifically around looking at how do we fund community gardens across, urban areas, and open that up, open source that, because a lot of it's being privatized and it's like glass and concrete and steel. So how do you get people together and say, no, let's take over these things? The energy side is our financial revenue stream. It's the engine that drives it. And if the engine is going to be running on something, it better be running on something that's not negative. Yeah? So we have predominantly used solar, and so Energy Garden is a not-for-profit cooperative. It's an entity, and so it is raising the funds and it's bringing in. We use FX, which is not, it's another platform which does due diligence as well. But we've built the organization. So Energy Garden is a not-for-profit community benefit society, which is overseen and regulated by the Financial Conduct Authority. So as a society, we deliver those things, and we are the ones that own. So if everybody on the stage here puts in £50, and Gerry puts in 500,000, he's still a one vote, one member of that club. He has no more say than the three of us. And so the idea is it's about that true governance, the social and the governance side of things.
What I wanted to understand is are you working with the same solar cell supplier, PV supplier?
No, with different ones. For different PV suppliers, no. So when we have sites, very specific questions about where we have solar sites across London, and those sites, depending on the price and depending on the time, because I've been doing this for 10, 15 years, different companies have come in and out of being. And so specifically, we're trying to work with the best, most sustainable organizations who are delivering those panels. I'm very happy to go into that further. I know this can go down a warren hole of who's the most sustainable solar panels, but we have thought about that, and we do try to come up with the best products for use.
I want, now that I have the word building contribution, ESG solution doesn't need to be more expensive than in as a investment. We have proven on the commercial side, with supermarkets, for instance, 200 of them with high standard of sustainability. So it is possible to do ESG also in a competitive state and afford at the same conditions as normal investors, maybe sometimes different. Thank you.
Thank you. Other questions? Yes, sir.
I was interested, Elizabeth, you said you could wave your magic wand if you would focus on financial education.
Yeah.
Thank you. So you said if you could wave your magic wand, you'd focus on sort of more financial education. But do you think that there's a risk in terms of if we were to just educate people now, then they would be educated in an orthodoxy that sort of needs to change? What I mean by that is it's kind of the icon behind you that just shows this pattern of growth. Everything can be better, everything can kind of grow, but the reality is that the world we're moving into, some things will necessarily fail, and we need to start to prioritize things other than growth. So if you could wave your wand again, would you maybe change the content as well as to what is being educated?
Yeah, that's a great question. I mean, when I'm talking about financial aid, I'm including looking at the fundamentals of the economic system that we're in, including growth. That's part of it, which is actually an unsustainable model. And all those assumptions, I mean, Julia mentioned that book, Donut Economics, those fundamental assumptions in economics that kind of led to where we are today. So I include that all in financial education, understanding and knowledge.
Thank you.
Other questions before I resume? Fantastic. Cam, I mean, on the institutional side, fund managers, reporting data, investors, ESG, has it changed the industry, that sector? What trends do you see?
Yeah, I think it's changing constantly. The industry's been quite good at taking lumps out of each other for quite a while on a competitive scale. So people want to be better than others. And one of the most interesting things is we used that at the big exchange. We said, okay, if that's the way that people want to do things, let's rate funds and fund managers on how well they do certain things. One of them be reporting, for example. You know, if a fund says they do something, report on it and make that report genuine and good. And if we say we rate funds gold, silver, bronze, quite simply, and a fund manager who gets a gold is relatively happy, but a fund manager who gets a silver or a bronze, and you say why? Say, well, you know, here's a best-in-class report. Look at the detail it goes into. Look at how well they're engaging with their underlying companies. Look how well they're telling end investors, the beneficial owners, the people like us who might be investing in a fund, what they're actually doing. And suddenly, you know, things start to click, and they go, okay, well, we need to do this. You know, we can't be second best to X asset manager, so therefore we need to change. And I think that competition is healthy in a certain state amongst certain funds who are doing the right thing and want to do the right thing, because there are a lot of people behind this who are trying to do the right thing. So yeah, we found that element of competition to be really useful in as a small but ambitious startup trying to implement change in a massive industry.
Here's a question that I had in between coming here from an investor. They were like, you know, you offer ESG investing. However, I'm a light green investor. Do you consider when you're ESG investor, you have to be absolute, or could you be dark green, or could be light green being, I invest a little bit in ESG, but not a lot. Anyone want to take that?
All I can say is I've gone around banks for many years, and I have colleagues who've been in banks for many years, and the ESG or the green or the sustainable table used to be empty. There was always a desk. And you know, in the back there's all these tables. There's 2,000 people on that floor, and there's a desk. And they had to have the desk, but no one used the desk. And the families would say, make sure that desks do they have a green? Yes. And then they would say, oh, it's very important. They almost act like a broker to get them into the house. But then, what was the actual thing that got the investment? It wasn't the ESG or the sustainability desk. And as people then doubled down and said, no, I really want something that shows that we're doing something, because they felt, usually it's, you feel bad about where your money came from, or you feel bad about where the money is going, and that it's not 100% doing good, and you want to do something good for the community. And they were basically pushing the organizations harder, and then the sustainability desk got pushed into the marketing desk, next to the marketing desk, and they sort of just, instead of going out and doing better DD and finding projects that could get to scale and that could really use that investment, they started just storytelling and putting better pictures on it. So, you know, is it changing? Is it getting better? Yes. Is it fast enough? No. Can we do something about it? Yes. If you're an investor and you say, I want some clarity on my investment. I want to know what are your pieces. I'd like to go and see them. They will. What? Wait. We'll take you there. And then they want to control that whole narrative and that storytelling. But I think, as we were talking about with Julie, with the FCA and the standards marks that can be applied, we can really start to find excellent products that are out there that can scale and that can be investable grade products. But it's a bit of a I want to not use expletives. Dark art of moving money through a organization without actually spending the extra time it means to get the best projects and support those projects and get the outcomes that the investors want. And there's no other reason except for laziness and greed.
Interesting. Another question.
Isn't the notion of light green essentially the problem? Like something's either sustainable or it's not. Like you can't just have a little bit of sustainable because then the rest of it isn't going to be sustainable. So I think maybe the green bit is what we need to move away from and start thinking about, is this leading to a sustainable future, period?
Very good point. Another question that came up right before I came here, a couple individuals asked me, they said, is ESG investing long only, or can I short? Do I cross the line? Anyone want to tackle that question?
So, what do you mean by short?
In other words, that I could sell short stock, I could sell short the future, I could sell short a bond, or do I just have to be long the investment?
Well, I don't know. I mean, investing for me is a long-term thing, so I don't know whether.
So I'm happy to jump in on that one. I think there's enough complexities in sustainable ESG and ethical investing at the moment without bringing in complex strategies. Like for us personally, we have to make sure that our mutual funds are distributed to unsophisticated investors in the UK. It's a horrible term, but it just generally means like ordinary UK investors. As soon as you start introducing strategies such as shorting, going long, adding in hedge funds, not only does the price go up, right, which makes it a barrier to entry for people, but also the complexity goes up. And where I can take the question away to what I would say an ordinary investor might think about is more about divesting. Does the fund manager take a strategy to divest from companies which either they don't agree with, that have practices that they don't want to support, that are in industries that they find harmful? That is something that fund managers can explain to end investors and say, we will not invest in these types of assets at any level. We'll exclude them as to avoid harm. As opposed to shorting, I think that can potentially muddy the waters, so to speak.
Very good answer for a complex question. Elizabeth, any kind of resource out there for the ESG investor that you've come across, whether it's a website or a report you want to share with anyone?
Oh, well, I definitely recommend the book that Julie recommended, Donut Economics. CAMS, it's a very good big exchange. There is, those are the best things I've come across so far. Yeah.
Good.
Yeah.
Questions? As we're running close to short on time, could I just take a little bit of poll? Who would consider themselves ESG investors out in the crowd? 1, 2, 3.
Interesting.
Real quick question. When you invest as ESG, is it stocks? Is it funds? Anyone want to share a little bit of their experience? Sir?
Individual shares in cooperatives and community organisations, so not necessarily traditional equity, things that are actually valuing it and not focusing on return.
Great. Anybody else want to share their experience in ESG investing? No? So I'm going to, we got one more.
Sorry. Hi, well, I'm from M&G, so, and we're kind of co-sponsoring this event, so we're potentially one of the problematic, groups that Agamemnon, which is a great name, by the way, flagged. But and I would agree that we invest in stocks and debt and infrastructure and real estate. I kind of agree also with Cam's point on we wouldn't say ESG investors. We're sustainable investors. We think about ESG issues, but I think you're right. I agree with the view developing that it's quite hard to be an ESG investor. sustainable and impact investors need to think about ESG issues. Maybe that's semantics, but I think it's a good distinction I think we need to be tighter on the language that we use as an industry, and obviously we need to protect against greenwashing in all the ways that we can, and I think language and clarity is a really important way to do that. Sorry, that wasn't exactly your question, but yeah, but we do invest with an ESG mindset across asset classes.
Yes, ma'am?
Thank you. And there was a consultant telling about that they work on integrating the UNECE criteria and the SDG impacts into sustainable, and that they walk from ESG towards more broad sustainability and implementing these things. It would be interesting to having the comments from the panel on that point.
Yeah, I'm happy to take the comment on the SDGs. I think they're incredibly useful concepts if you know about them and if you understand what they're there for. What we found from many of our investors is that they still don't know exactly what they are, why they're there, and what the purpose is for them. Where I think they're useful is in terms of creating a tangible relationship between an outcome that an investment wants to generate and a challenge that we're facing in the world. Now that's not to say that everything has a direct link, but it says that these are issues. Be aware of the issues. Here's the outcome of what your investment might be. This is why it's important to look at these types of issues, because we have a role as well, not only to increase education on certain things, so make them aware, but also increase awareness of what we're all trying to do. And that's an uphill struggle. There's incumbents around who have cash, who have resource, who can flood the market with nice pictures and boats and seas. We've got to do certain things to kind of tie people back to what certain outcomes are for real, true, sustainable and impact investments.
So usually during these kind of presentations, I get to ask questions, I get questions from the crowd, but I also like to give a fair amount of opportunity for the panelists. If there was one question you wish I would have asked, or somebody from the crowd, what would that question be, Elizabeth?
Could I go last, please?
Sure. Kim?
What question would you ask me? I think I would look at potentially where I see the future of investing in maybe 50 years. I think where do I see the future of investing in 50 years?
Which is?
Well, I'm hoping, right, that with the pathway and what everyone's been saying here about traditional investments are unsustainable, we'll start to see outcomes around that, and that we won't be necessarily having these conversations about fighting uphill battles. That that capital will be directed to projects for their outcomes, proven outcomes, and that many incumbents may not exist anymore.
Thank you.
I would have asked me, how are you going to prove that your wonderfully community projects that everybody is smiling on, at schools programs and youth training programs for Black, Asian, ethnic minority kids, how are you proving that? And I would say, biometric, a dashboard which we've created with Imperial College and Bank of America, which has the UN Sustainable Development Goals, and it's color-coded, and you press a button and it slides left, and it shows you pictures of them, and then it's color-coded, and it shows you how many pounds of honey has come from beehives across London. It shows you how many young people have improved in education around energy literacy or financial literacy. It shows you, and it links those SDGs. And then I would say, go and look at it on the website, and you can become a member. And then I would smile next to my picture, and I would say, scan the QR code and get involved.
Thank you. Elizabeth?
Okay, my question is, what's my ideal picture if I could wave my financial wand in 5 years' time? Okay, so we'd all be sitting here, but there would be no Sustain.Social and London Investment Show. It would be the same thing. And we wouldn't be arguing about the terms, and there would be a positive a real shift in terms of shifting the global financial juggernaut to making, just doing something different. We will have reinvented our financial systems. I don't know how we're going to do it, into a more financial equality, which means sustainable equality across the globe.
Great. Is there any final questions? If not, I'd like to say thank you very much for the panelists as well as you for attending. I hope you've learned some insightful comments from everyone here. Please enjoy the rest of today, and thank you very much for attending. Thank you.
Thank you.